Good afternoon and welcome to Bober Markey Fedorovich's webinar on tax implications for employers' work from home arrangements after COVID-19. Presented live on Wednesday, July 8th, 2020. Thank you for joining us today as we discuss the tax implications that employers need to know before considering permanent work from home arrangements post-pandemic. If you're listening to us live, please use the Q&A box to submit your questions and we'll address them at the end of the discussion. If there's any question that requires a more in-depth response, we will follow up with you offline so that we can appropriately address and give you attention to your inquiry. This live session qualifies for 1 hour CPE. To qualify, please follow the link at the end of the webinar and complete the survey. If you're dialing in by phone, please email the phone number you're calling in from so we can send you the link separately. You can send your dial-in information to info@bmfcpa.com. Certificates will be mailed within 10 business days. This presentation is also being recorded and we will send you a link of the recording afterwards. So if for some reason you need to drop off, you can always come back to view the presentation at your discretion. If you're watching the recorded version and have any questions at all, please do not hesitate to email us at, once again, info@bmfcpa.com. Leading us through the discussion today is Mark Rossetti, Senior Manager of our State and Local Tax Services Practice. And I'm Samantha Rathburn, Manager in our Tax Services Practice, and will be serving as your moderator today. Without further ado, let's get started. Mark, with all the uncertainty surrounding the pandemic and the stay-at-home order, can you tell us about the relief that was afforded in Ohio House Bill 197?
Sure. So Ohio House Bill 197, which was signed into law in late March, March 27th to be exact, did a lot of things for Ohio. It pushed back the tax deadline for a lot of the individual filings and business filings, but it also addressed this work at home issue, thankfully, because if the legislature had not addressed this issue, it would have been something that employers would have had a really hard time to get their arms around during this pandemic and during the uncertainty of it. So what Ohio House Bill 197 basically says is that for the emergency period, and that emergency order was signed by the governor on March 9th, and through the emergency order, which is still in effect, and for 30 days thereafter, when employees work from home due to the pandemic, they can be treated as though they were working from their principal place of work.
You mentioned principal place of work. Can you define what that is for us?
Sure. So principal place of work it's a concept that has a lot that goes into it, but it's pretty simplistic in nature. So the first thing that you want to look at is there a fixed location? So fixed location for a quote unquote normal employee would be where you go into work every day. So if you're an office worker and you drive into work and you drive home, it's where that office is. You work in manufacturing or you work any place where it's a fixed place of business, that's where your primary place of work is. And that's where the withholding generally is done on the employee first. As a lot of people know, Ohio municipal taxation, you get withheld or you get imposed the tax where you work first and then to your home jurisdiction as a secondary level. So if you have a fixed location, that's where your primary place of work is going to be. If you don't have a fixed location, but you have a work site location. So for instance, if you're in the construction industry and let's say that you, let's say that you are working in the construction industry and you have a job site that you go to. So you're building a building or something like that, and your employees are going to be there for 2-3 months at a time, then that becomes their primary place of work because that's where they're going to for those periods. And if you don't, if you're a mobile employee, let's say, again, you're maybe working in the construction industry and you travel from city to city to do your job, then at that point, you look at your primary place of work as where you spend the most days throughout the year. So if you had 50 work days in one jurisdiction, 100 work days in another, and 50 in a third, wherever that 100-day location would be your primary place of work. And for the 20-day rule, because the 20-day rule comes into effect for mobile employees.
So I understand the principal place of work concept now, but you mentioned the 20-day rule. How does that come into play? How does the principal place of work concept come into play with the 20-day rule?
Sure. So the 20-day rule, and for those that aren't familiar with it, it's still in its fairly infancy for tax purposes. It was brought into play with House Bill 5, which came into effect January 1st of 2016. So it's only been around for about 4.5 years. But maybe just a little bit of history. Prior to the 20-day rule on House Bill 5, it used to be a 12-day rule, and it was a 12 contact period day rule. So what it said was, when you have employees that travel to different jurisdictions or work from home, work from a fixed location, if you have a contact day within a jurisdiction, if you set foot in the jurisdiction. So in my example of a construction industry, let's say you have a plumber, and he leaves his house and he travels to Akron and Fair Lawn and a bunch of different jurisdictions. Well, prior to House Bill 5 and the 20-day rule coming into effect, he would have a contact day in every single one of those cities. So if he had a filing requirement or withholding requirement, he could be withheld in multiple cities, all for the same day and in the same wages. It was a little unfair, and so House Bill 5 looked to rectify that. So what they basically said is, now you have 20 days that you can work in a jurisdiction without creating a withholding requirement, and it's the preponderance of the day. So now it's not just if you have a touch point with the city, it's a contact day, it's the preponderance of the day. So if you spent 4 hours in one city, let's say Akron, 2 hours in Fair Lawn, and 2 hours in Medina, then Fair Lawn and Medina would get no withholding, and Akron would get the full day's withholding. So you don't have that multiple layers of taxation on the same day. So the 20-day rule basically says that if you spend less than 20 days in a jurisdiction, then as long as you withhold to your primary place of work, meaning your fixed location or wherever you might have that primary place of work, you don't have to withhold to that other jurisdiction. So this rule was kind of set into place basically for mobile employees, but in today's world, obviously, with the work at home issue, it does come into play with that as well.
Thanks, Mark. Go ahead.
I'm sorry, one other thing that I wanted to mention. So, there are some exceptions to the 20-day rule, and those exceptions are if the employer, the business itself, has less than $500,000 of gross receipts. So if it's deemed to be a small employer, then those companies don't have to comply with this because, again, you're a small employer, and they didn't want to burden small employers with these withholding requirements in a bunch of different jurisdictions. The second reason that it wouldn't come into play is if you're an athlete or an entertainer or some sort of a professional celebrity. So those individuals that come into the state and they are having a concert or a sporting event, obviously the cities want their pound of flesh. They want to be able to tax those people on those large earnings. And so the 20-day rule does not come into effect with them as well. And the third one is when, if you anticipate that you're going to breach the 20-day threshold. So if you're an employer and you know you have large engagement or a large project in a certain jurisdiction outside of an employee's primary place of work, then you can withhold to the proper jurisdiction day $1. Meaning, let's say I'm an employer and I send an employee 1 day a week to a project in a different jurisdiction. Well, I reasonably know at the start of the year that that employee is going to have at least 52 days within that jurisdiction. So you can go ahead and bifurcate those withholdings to each jurisdiction as needed the proper way. Samantha. you're muted. Okay, so one of the area I wanted to cover was reciprocity and withholding requirements. So, you know, as an employer, certain cities and states allow reciprocity or credits for taxes paid into other jurisdictions. So at the state level, let's say you're an employer and you're along the border with Ohio, and you have employees that are coming into Ohio to work at your business. So there's always been reciprocity agreements between Ohio and other states as far as state level withholding. So those reciprocity agreements basically say that the employer withholds on the employee's home state, not the state in which you work. So again, you're an employer in Ohio, you have somebody coming across the border from, let's say, Pennsylvania, they're performing services in Ohio, you don't withhold for them in Ohio, you withhold for them in Pennsylvania. That's not true at the municipal level, since municipal taxation makes you withhold to the place of work first. When those employees come over, they pay municipal taxes where they work. So this, the House Bill 197 and the ability to treat them as the primary place of work will come into play, and you will still have to withhold for those out-of-state employees coming in, even if they're working from home. You would have to withhold to the primary place of work's municipality. Again, you have municipalities, the work municipality and the home municipality of the employee, where some home jurisdictions allow credit for taxes paid to the work jurisdiction, others allow a partial credit, and some don't allow any credit at all. So the employee might have to pay additional taxes to their home jurisdictions.
Hi, Mark. Sorry about that.
Yeah.
Technical difficulties. So where did we leave off, since I'm just catching back up?
So it'd be question 4.
All right. So we already talked about the reciprocity.
Mm-hmm.
Okay. Well, so thank you for sharing all that on withholding requirements. I'm sorry to our audience. But what happens if I just realize that I have incorrectly been reporting the withholding for my employees? How far back can the cities go and audit, and is there any relief that I can get?
Sure. So thankfully, about 15, 20 years ago, when Tom Zana was the tax commissioner, he implemented a statutory language that says that when an employer is audited for withholding tax purposes, and it's deemed that they did it incorrectly. So let's get an example. Let's say I work in Fair Lawn and I live in Akron, and I was working in Akron for more than the 20 days, and I should have been withheld for in Akron, but I wasn't. I was withheld to Fair Lawn by the employer. If Akron audits the employer and they say, hey, you know, you should have been withholding from Mark Rossetti for all these wages, and it's been going on for 10 years. Well, they'll try to assess you for those 10 years worth of back withholdings, and rightfully so. To the extent that there's an open statute of limitations, which in Ohio for municipal tax purposes is 3 years, to the extent that the employer can go back and get a refund against the primary place of work jurisdiction, which in my example would be Fair Lawn, they have to do so. So they would have to go back, get the money back that was withheld to Fair Lawn, and pay it to Akron. But to the extent that there's periods beyond that where they can't get any relief, then the Ohio statute basically says that the other jurisdiction has to give you credit for the taxes that were paid in improperly to the other jurisdiction. So Akron, in my example, would have to give you credit for the taxes that was withheld from my wages in Fair Lawn. Obviously, there could be a rate difference or something along those lines where you might still have to pay some tax for those prior periods, but it does kind of give employers a level of comfort that you know, a municipality can't go back to the beginning of time and start assessing them for a bunch of tax where they would have no recourse.
Thanks, Mark. Can my employees get a refund from their principal place of work municipality for the days that they worked from home during COVID?
Great question. This is the question I get probably the most often since this all came about. hey, I live in a non-taxing jurisdiction, I've been working from home, can I get a refund? And unfortunately, the answer is no. Because House Bill 197 says that any days that you work from home are treated as though you were working in your primary place of work, that basically circumvents that, and it says, sorry, those days are treated as though you went into your office or your manufacturing facility or wherever it is that your primary place of work was. So they're treating those days synonymously with the primary place of work. So again, I'd love it because I live in a non-taxing jurisdiction and I work in Fairlawn where it's pretty hefty tax rate. So I would be the first in line to get a refund, but and nothing precludes you from trying to get a refund, but the cities aren't going to be obliged to have to give you a refund if they don't want to.
I live in one of those not so friendly cities, actually.
Yeah.
So I'm sure others could probably share in that. From the company's perspective, if they file withholding taxes in a new municipality for the year, will they also have to file a business net profits tax return?
Yeah, that's the other detriment to this. So if an employer decides post-emergency period in that 30 days that working from home is not a bad thing, and they want to offer this up to their employees as a permanent option, the answer is yes. You know, when you have an employee that lives in a jurisdiction and is performing services for the company, that creates that requisite nexus or the connection that the city needs to tax the entity. And if you file withholding in the new city knows that you have an employee, and they're going to say, well, wait a second, you have an employee in our city, they're performing services for you, and therefore the business has a net profits filing tax return, because the way the net profits tax returns tax entities is based on apportionment, and your apportionment is your property, payroll, and sales. And clearly you have one of those factors now. You have a payroll factor. And so it definitely will put that company on the radar in all these jurisdictions. So the unfortunate thing is that companies that, let's say, have one fixed place of location and are going to consider allowing employees to work from home on a permanent basis, that might open them up to filing in a whole bunch of new cities that they've never filed in before. Well, that's a lot of filings. Well, the good news is the Ohio Business Gateway now allows you to file a centralized return through Ohio Business Gateway, and you file basically one return and you allocate your income to all the different cities. Now, to do so, you have to opt into that. And the opt-in period expired March 1st of 2020 for the 2020 tax year. So again, we're kind of right in the middle of COVID-19 on March 1st. It was just ramping up. And so the thought was maybe Ohio would be nice and extend that opt-in period, because you have companies who didn't think they needed to opt in because they only filed one city tax return. But now, depending upon when the emergency period expires, they might be in a position where they're going to file in, say, 20 cities or 30 cities or 100 cities. And boy, it would be nice to file one return through the Ohio Business Gateway, but you can't do it for 2020. You have to wait to 2021. Now, if the emergency period rolls into December, let's say December 5th, and it gets lifted, then obviously you won't have that issue for 2020. It'll be a 2021 issue. But one thing to note is if you decide to allow employees to work permanently from their home, and you decide that today, let's say, so you go to your employees and you say, you know what, this work at home thing isn't as bad as we thought it was going to be, so we want to open it up to everybody, and everyone opts in, and they say, sure, I want to work from home. Well, at that point, now your primary place of work is shifted, and it's not due to COVID-19. It's not for, safety purposes. It's more for the employer and the employees come to some sort of an agreement, and at that point, you have to shift the withholding over. And that's not a terrible thing. Again, there's pros and cons to the work at home issue. I mean, if your employees are open to it, it is a benefit. It could be something that could allow them some flexibility. It could also save the company some money. If you think about the space that's necessary to run your business. You can have a smaller footprint per se. But when companies are factoring all this in, they do need to take a look at the increased administrative burden of potentially having to file not only withholding, but again, net profits tax returns in a bunch of different cities. So those things all come into play and should be, collectively put together as far as when you make that decision whether or not you want to allow this to happen. So the other thing I wanted to mention, it was funny because I signed up to do this webinar, but just last week in the Ohio Canton Depository, front page here, work from home has side effect. So the cities are definitely worried about this trend and whether or not companies are going to allow employees to work from home on a permanent basis, because it will shift the entire withholding dynamic in Ohio from cities which traditionally house larger employers to residential cities and potentially townships and places that don't have a tax. So they're worried about revenues. And one thing when cities or any government is worried about revenues is they could look to legislation. They could look to legislate this issue and to potentially close that loophole where employers withhold to the home jurisdiction. So it's just something to think about from that perspective.
Thanks, Mark. So we've actually covered the entire list of items that we thought were important today, and now we want to turn it over to the Q&A portion. I don't have any questions in the pop-up box, but I do believe there were a couple that got emailed ahead of time. Were those already addressed, Mark, or do you want to elaborate on some of them?
So one of the issues that has popped up, and it's another administrative burden, but it's something to think about as well, is tracking of employee days in and days out of jurisdictions. So when you have an employee that decides, or if you decide to be really flexible and tell your employees, you know what, you can choose how many days you want to come into the office or how many days you want to work from home, then it's going to be on the employer to track those days, because you're going to have to know how much of their salary or hourly wage is going to get withheld to each jurisdiction. And that could be a real problem for some employers who don't have time tracking already implemented in their system. So industries like, let's say, accounting, we have employees that are mobile, that go out to clients, and then you add on this level of work from home, and now you got multiple items that you're going to have to track to understand how to properly withhold to each employee. So one employee decides, well, I want to work 3 days in the office and 2 days from home. Okay, well then your primary place of work is going to be the office, because you spend more days in the office than anywhere else. And so because you're working 2 days from home, the employer reasonably knows that on the 10th week, I'm going to bypass that 20 days of the 20-day rule. So the employer should bifurcate those wages immediately and take 40% of the employee's wages and put it to the home jurisdiction, and 60% of the wages and put it to the work or the office location. So those are all things that, a lot of people don't understand when it comes to being flexible with your employees. If it's a static, you can work from home 1 day a week. Well, then again, the employer is going to know that 1 day a week the employee's working from home, so you should give 20% of the wages to that jurisdiction and 80% to the other one.
Thanks, Mark. I actually, I did get a couple questions from the audience. Can there be a quote unquote reset of principal place of business for certain employees? And if so, can that happen mid-year?
Yes, great question. And the answer is yes. Withholding in the employee-employer relationship and the dynamic of each employee is in flux at all times. It's dynamic. You could have a situation where there's a triggering event and you move from, again, COVID-19, great example. Everyone's working from a fixed location or within an organization, and all of a sudden stay-at-home order. Well, the employer is on the hook to kind of understand what's going on with their employees and the rules that are in place for the municipality. So there definitely could be a triggering event like, okay, we're going to switch you starting, July 1st or August 1st, or, the employer makes that distinction, and then they would need to support it. Again, if the city audits you for withholding tax purposes, you would need some sort of documentation to understand why you reported things the way you did and why you withheld the way you did. Yeah.
Thanks. You had mentioned that emergency cover period. So what is the date that we will need to start withholding the employee's tax from their home jurisdiction? So when does the bill expire? Is there any, can you shed any light on that?
So the bill is static, and the bill basically just says during the emergency period and for 30 days thereafter. So it's going to take the governor lifting that emergency order, which he hasn't done. Clearly, there's some hot spots around Ohio, and there's some additional required mask wearing in certain counties. So I don't see the emergency period being lifted anytime in the immediate future. But the one thing that you will want to track is when that emergency order gets lifted. So if the governor comes out and says, no more emergency, then from that point, you got 30 days to get your employees back in the office or their fixed primary place of work. Or else you're going to have to start looking at withholding to the home jurisdiction. Again, this COVID-19 relief is only during this emergency period, and it's only for employees affected by it. If you choose today to allow your employees to work from home permanently, then again, that switch has taken place, that the primary place of work has now shifted, and it's not for COVID-19 purposes, so you should start withholding to the new location.
That's a good point, because after some employers probably, they may have determined that this was very effective, and they may just decide to change their whole entire culture. So that was a good point. What about self-employed consultants who they have a primary place of work, but they go to client sites? So if they are paying self-employment tax, do they also have to file in the client's jurisdiction? So this is not a traditional payroll type scenario.
Sure. So, well, if you're self-employed, then you're not paying yourself wages. You're getting income from a Schedule C business. And so you're not worried about withholding unless you do have employees. And again, you'd have to be over that $500,000 in gross receipts threshold to even be subject to this. So assuming that you're self-employed and you have over $500,000 of receipts, your Schedule C business would have net profits tax filing obligations depending upon how much time you spend in those jurisdictions. Again, if you're under 20 days and you do a project in a city and it lasts a day or two, okay, well, then effectively you're going to file in your home jurisdiction because or wherever your Schedule C is domiciled, for lack of a better term. So it really doesn't affect you from an employer withholding standpoint. It would be on the net profits tax side that you would have to worry about.
You mentioned something in your response. So for the 20-day rule, it doesn't have to be a consecutive period of 20 days. So if I worked on a project.
No, it doesn't. You work 5 days during this week, and then you don't go back in that jurisdiction for 3 months. As long as it's within the same calendar year, the days accumulate. It doesn't have to be consecutive. That's correct.
Thank you for clarifying that. At this point, we don't have any additional questions. Mark, is there, oh, actually, sorry, I didn't scroll down far enough. How do you think the work from home will impact sourcing of revenue for purposes of city income tax apportionment? It's a good question. Not just the payroll factor, but also the sales factor. How does this differ for service businesses versus sellers of tangible personal property?
Wonderful question. This question is probably the one that doesn't get looked at enough. So if your work at home individuals are back office people, let's say, accountants, people who are not generating revenue for the company, then effectively it's going to be just a payroll factor and no sales factor. But let's say I'm a salesperson, or I'm somebody who generates revenue for the company, and I'm working from home. Well, now my services are generating revenue, so my sales, depending upon sourcing rules, which it's funny, the municipalities are what's called cost of performance sourcing. So when you perform a service within a city, that revenue that is generated by the service goes into the sales factor for that city. But for state level purposes, we're a market-based state. So you look at where the benefit of the service is. So you could be performing a service within a city, and so you could have a city level sale, but not a state level sale, because they treat those sales differently. And that's for services. Now, obviously for tangible personal property, if you're shipping product into a jurisdiction where your employees are now going to be working from home, so let's say you have a large customer in Akron, Ohio, but you've never filed in Akron before, and you have an employee who's going to work from Akron. Well, now that you're withholding to Akron and you have a net profits tax filing requirement, you're going to have to look at those sales that are going to that Akron location. And when you file your net profits tax return, you're going to have sales that are going to increase your apportionment and thereby increase your either profit or loss attributable to that city. So great question, whoever said that.
So it's possible if you're a service provider and you perform all the work here in Akron. If your clients are located elsewhere, other states, would you have state filing requirements potentially? Would it trigger a state filing requirement? It would, if their employees would possibly be traveling there, I guess, right?
Yeah. So the nexus argument, or the nexus rules, are fairly complex. So again, nexus is that requisite connection between a taxing authority and a company or the taxing subject of taxation. So you could have scenarios where you don't step foot into another state, but the state asserts that you do have nexus and you need to file. That's very common. It's happened in the sales tax realm with the Wayfair decision, which basically says if you sell enough product into a state to their customers, that you have to start collecting the sales tax. And states are grasping onto that, and they're saying, hey, look, nexus is this great thing that we can now start making all these companies file for all these various tax types. But the nexus rules are complex. They vary, it varies by tax type. It varies by what industry you're in, and whether or not your footprint. There's just so many things that go into that nexus determination, and companies that have a mobile workforce or that allow employees to work from home, they need to factor all that in, because it could be, allowing employees to work from home, if it creates nexus in a new jurisdiction, could raise your tax bill quite substantially if you're not ready for it. So again, that's why one of the key, and I know tax doesn't normally wag the tail of the dog, it's usually operations, and if you can make money, most of the time businesses will just break into a new state or break into a new jurisdiction and do things differently. But tax should at least be a thought that goes on the sheet of pros and cons, where you make an informed decision. So
lots to think about for the mobile workforce. Do you have any other items you'd like to address or any other questions that may have came through prior to the webinar?
Well, I do, I want to say that since this municipal 20-day rule doesn't apply for athletes, entertainers, and celebrities, when you're filling out your surveys after this webinar, this is intended to be educational and not entertaining. So Samantha and I don't want to pay municipal taxes in a bunch of jurisdictions. So don't make us an entertainer, make us educational. So that's what I would say. The salt humor is probably something that I try to interject a little bit. And when you're talking about state and local taxes, it usually is a pretty dry topic. But I always tell people when I'm out at a client, like, I got to get out of here because I'm going to create nexus for myself and Bober Markey in whatever jurisdiction I'm in. So it usually gets a chuckle.
Well, thank you for making this topic entertaining and throwing some humor in there. So at this time, we don't have any additional questions. If you had any questions that maybe you want to just ask offline, please feel free to send them to us via email. You can send it to the info@bmfcpa.com email address. We want to thank you all for joining this webinar. We hope you found it educational. Please remember to follow the survey link at the close of this webinar in order to qualify for your CPE. Again, if you're on the phone, please email us your phone number so that we can cross-reference and get you your CPE. Any additional questions, feel free to reach out and take care. Great afternoon.
Thanks.
Thanks, Mark.